Hey guys, how's it going? All right, I wanted to look at this gold chart, and it goes back from last year, but let's look at it right now. Right now, gold price is trading at 1208, our size 26.20, right on the oversold spectrum. Now let's look at the weekly chart. Weekly chart, you can see the R size at 38.70, and it is heading towards the oversold region, but I want to remind people just because it's oversold on these RSI or stochastic indicators doesn't necessarily mean the bottom is in. And going back to last year's chart, or the chart from last year to now, you can see gold got slammed up until the Fed funds rate when that went up. And I think like December 16th, December 17th, and you saw the rally from 1046 to around 1360, 1370ish. Over a 20% move to the upside. That it was huge. And in my opinion, the catalyst for that was the Federal Reserve raising the Fed funds rate. Now, you may say, what the hell does that have to do with gold prices going up? From a fundamental perspective, when these interest rates go up, right, it is actually more inflationary unless the Fed funds rate is at the market level. And when you have interest rates, right, go up, they always say that it is bullish for the banks. Why is it bullish for the banks? More lending because of the fractional reserve lending systems, more incentives to lend. So you got that across, right? Fractional reserve lending is inflationary. Two, you want to look at the deficits. The deficits do go up higher. You have to look at the fact that number one, Fed funds they go up, more interest payments go out to individuals than before. So, putting that into perspective and the fractional reserve item into perspective, you could see that this would create more inflation than otherwise would have happened. And because of that, this is, in my opinion, bullish for commodities, bullish for oil, bullish for everything denominated in dollar based assets, right? And you could see that the dollar index from last year, it's gone up, right? Or it's stayed the same, but gold prices, you could say, have gone slightly higher. And this is even with a stronger dollar, right? It's not as strong as we saw in the 1980s or a long time ago, but that's something to put into perspective. Now, let's look at where these guys are positioned. Okay, gold, I'm looking at the CFTC Commitment of Traders report, and I'm looking at the non-commercial versus the commercial. This is dated November 15th, so this was what, Wednesday, Thursday of last week. You can see from a non-commercial perspective, they are more net long than short. I have positions all over the place. I'm long and short, but I did start to accumulate gold at 1220, right? The E micro futures contract. It's the lowest of the low on the contract perspective. And I plan to add more because I assume that the gold prices will go a little lower. And I'll get back into that. So, right now, the non commercial money, which tends to be more wrong than right compared to the commercial money, they're net long. Now, if you want to look at the commercial money, that tend to be the smarter money, they're net short. We don't know how their positions may have changed towards the end of the week, but this is what's being reported as of right now. And we could look from a currency perspective. You could see that right now they are more net short the yen than they're long the commercial money, the smart money. And the commercial money, non commercial money, they're more long than short. And we could see that right now the Japanese yen has been weakening, and whenever you see a weak yen, that usually leads to lower gold prices. What's quite interesting, changes from the net open interest, right? There have been more positions added to the long side for the Japanese yen. And when you do go long the Japanese yen from, if this is a futures contract, right? This is not the actual currency. So if you want to look from a currency perspective, you go long the Japanese yen. That means from a forex perspective, the Japanese yen rallies, and that's usually risk off, market sells off, gold prices go higher. But once again, these correlations don't always add up. But this is what I've seen for the last, what, 4 or 5 years. And if you want to look at the euro, the largest component of the dollar index, right? You see the non-commercial money, right? The hedge fund guys, the guys who aren't smart. They're smart, but their positions don't usually run in their favor. They are more short than long. And what I've said about the euro is, if the euro goes down, dollar goes up, because 58% of the dollar index consists of the euro. If you want to look at the commercial money, this is what I find really interesting. Commercial money is more net long the euro. And what's happening to the euro right now? The euro is being slammed. And what they say about the commercial money is they tend to be more early than late, but they usually get the trends right. And the non-commercial money are usually the trend followers. And these commercial guys, are usually with big pockets, so they could withstand fluctuations to the downside. That is really, really interesting, though, that you got a lot of people right now on the commercial side long the euro, which means if this position were to become profitable, that means the dollar would go down. And what you saw in open interest, right, for the Japanese yen, right, they're going more net long the Japanese yen. But what confuses me is that gold over here, they're more net short than long, right? So really quite interesting. Now I want to go back to this gold chart. So assuming that the Federal Reserve does what they did last year, raise the Fed funds rate, which is going to be on the plate December 13th, December 14th. So mark your calendars for that date. And you see right now, commercial money net short. You see right now, the RSI for gold is at 26.20. In my opinion, this could go lower, the gold price. But if they raise the Fed funds rate, in my opinion, shortly after, this would be bullish for the price of gold. This would be bullish for commodities. And in my opinion, that you could see a similar rally to what we saw last year in the price of gold. And in addition to gold prices going higher, you have a new administration with Donald Trump. You saw the knee-jerk reaction when Trump won. You saw everyone shorting the euro, which meant the dollar went up, yields went up. But with the Trump administration, right, you're going to see more deficit spending. You're going to see tax cuts. You're going to see regulations from the Obama administration go away. Not all of them, but you could see a handful of those regulations going bye-bye. And that would mean that you would get more capital formation, and in my opinion, yes, this could be bullish for the stock market, but for inflation as well, right? Despite a rising dollar, right, this would be inflationary. And I said in yesterday's video that whatever Trump is doing right now, this in any given situation would lead to a dollar going down. But because of the situation in Europe, you could see the dollar going up. But even if the dollar goes up, in my opinion, gold prices will not lag to the extent that they should fall down. Same with the oil prices. So I still feel that you could have gold prices go up, the dollar go up, and the stock market go up. But this is an interesting phenomenon, and I do